Why do you think focus investing is not gambling?
A great question. How would you define gambling?
Oh, so you've got your slots, you've got blackjack, you've got cards. There's all these different kinds of games you can play, but ultimately you're risking money with the potential of it growing, but ultimately you risk to lose it all. Going to the house or the machine or whatever. That's my understanding of what gambling is. I guess, was that kind of what you're
You use the
asking me?
word risking multiple times, so what does risk mean in context?
Yeah, I guess risk is like win more money with the money that you put on the line, or lose it all.
Lose it all.
Yeah, there's never like gambling where you like lose like 75%, I guess, unless there's a game I don't know about.
Exactly.
Yeah. At least on your betting line, usually, yeah.
It's when you're in a situation where probability is that you're going to lose everything, or in some cases more than everything. That to me is what gambling is. And so if you can create a situation where you either can't lose 100% of it, or the probability is on your side that even if you could lose 100%, more than 50% of the time, you could make that 100% back, or significantly more than that, where essentially math and time are on your side, then you're in the investing slot. And so why is focus investing not gambling? Just for context, focus investing is investing in as few things as you can. It's anti-diversification and doing it for a long period of time. And I think as the general ethos of it is like, when in doubt, skew contrarian, do the exact opposite of what Joey Public is doing. And I mean, if you were focusing just a couple of things into assets that were a dumpster fire from like a risk reward perspective, that wouldn't be investing at all. That would be gambling or worse. But essentially what this is hinged on is that these assets have a great chance of turning every $1,000, let's say, into 2,000, 3,000, or way more than that. And then I think an important piece, at least of the way that I do it, is that for reasons that you could explain to a 6-year-old in 5 minutes or less with a crayon, it's not going to drop to zero unless something borderline unfathomable were to happen. And so my contention is high reward, low risk investing does exist. What a fat fish is, my company's Find Fat Fish. A fat fish is an opportunity to turn a month of expenses into a year of freedom with no realistic chance of that money dropping to zero. And those opportunities are available. In my opinion, they're abundantly available. But you then do need to be willing to suffer certain trade-offs that a lot of people really just aren't willing to deal with. And a lot of the time, those are the things that a gambler is enjoying, that a focus investor that refuses to focus invest isn't willing to tolerate. Namely, you need to be willing to do your own thinking. You need to be willing to do a pretty significant amount of work, usually front loading the work so that further is just maintenance at most. And you need to be patient. And I think in particular, the last thing, I think all of it, critical thinking, some good old fashioned meritocracy in terms of how hard you're actually working, and the patience, each one of those can be disqualifying for lots and lots of people. And they then find themselves in situations where they are pursuing like low reward, high risk situations simply because they're not willing to think for themselves, do the work, and follow through. And when you look at, I'm thinking of, I don't know if there's I feel like I saw an ad about this recently, but in the 90s in particular, like late 90s, there was this belt. You'd see it on infomercials where it was like, I just wear this belt and I flip this switch and I get 6-pack abs. I can't believe it. There's a lot of this like ab belt crap in the financial space. And usually what it is exploiting, I would say, is people's lack of patience or ability and willingness to question assumptions and do their own diligence.
Yeah. One of those kinds of opportunities that I see a little bit pop up on Instagram is, and I'm sure it's on other social media sites as well, is like the prevalence of like trading. I'm pretty congruent with the idea that focus investing is not gambling because we've talked about it so much. But one of the things that I see pop up with all of that is people marketing online jobs or like e-commerce or day trading. Do you think day trading is gambling? And what kind of skill set do you think a trader needs relative to an investor?
So when you're using the word trading, because in the same way that segregating between, as we've talked about previously, like revenue and profit is important, the product, the company, and the stock, like these are important distinctions to draw that a lot of people are using lazy language, lazy logic, conflating these things together expensively. What to you, coming into this conversation, like is your definition of trading as it compares to investing?
Yeah, so I guess focus investing is a long-term solution to provide freedom or wealth or whatever you want to call it. I think it was Warren Buffett said the money isn't made in the buy or the sell, it's made in the hold. And so I guess my understanding of investing is that your plan is to hold as long as possible, if not forever. Whereas trading, you are trying to take advantage of volatility in the market, potentially interject volatility into the market because that serves your best interest, as we talked about with gambling and that kind of crossover there. And buying and selling at the right time, the peaks and troughs, in a way that best serves your, I guess, goal.
100%. That's exactly right. And so I can't watch financial television because it just makes me like visibly and viscerally upset. But basically the thing that I want to scream at it when they're like pitching their ideas and whatnot is like, okay, on what time horizon? Because it's very different to invest in anything. If your time horizon is trying to make money today, trying to make money this month, trying to make money this year, trying to make money this decade, everything is different. And no question, there are people who have built the skill set for whom trading is actually investing. One of my really close friends from uni is an almost staggeringly successful institutional day trader, where essentially he went through a training program, prominent place in New York. And after going through this mentorship and training program, they then staked him millions of dollars that he then turned into a lot more. So essentially institutional training, being handed to leverage OPM, other people's money, and then in a room full of people that are experts, that are competing with each other, that are driving stock prices up and down. This is a version of someone for whom you could easily argue that as a use of time and money is investing, because they're doing it with sleight of hand. Those guys are not gambling because of all of the aforementioned. However, for most people, trying to make money today is likely to end in tears. And also, even if you are, and I talk to a lot of people like this that either have very fleetingly made money as day traders, the opportunity cost is that they're having to give a huge amount, like more than like a full-time 9-to-5 job worth of energy to it. And then with the trading volume, the capital gains tax is significantly higher. Actually, we talked about this before. What are the things that amateur investors should be aware of? One of them is capital gains tax. Naturally, this varies from country to country, but in the US, and I think as a de facto standard, I know even New Zealand, this is true. Now, you're paying exponentially more if you are selling an equity that you bought within a year. On day 365, the capital gains tax that you're paying on your unrealized gains that become realized gains drop exponentially. And so you're paying way more. But the bigger thing that I'm talking about isn't the income part. it is also the lifestyle part where you are grinding. You got to be there when the market opens, everything like this. And so if you look at the bottom of findfatfish.com, there's an illustration that I wrote. Like, I always write like strangely specific screenwriting instructions for the great Steve Wosterval to then illustrate. And it's a little fat fish cruising at the top and going towards a little bag of money called long term. And then these like well-dressed sharks ripping themselves to shreds, fighting over short term, with then a whale coming in ready to inhale them all. And that is a little metaphor for how I see it. And that has done nothing but become more and more and more true as these, I'm forgetting the term for it. It was a Michael Lewis book about day traders, but as day trading has become hyper institutionalized and hyper, and like the technological edges have skewed higher and higher and higher. That doesn't mean that the entire stock market is rigged. It doesn't mean that investing is a bad proposition. What it does mean is that if you try and like hang with those sharks, you are going to get inhaled by a whale. That's just not. And like the numbers around, these are old numbers. And if anything, I would be willing to wager that they're skewing even more sort of punishingly. But it was 82% of options expire worthless, and 90% of day traders lose money. And so, despite massive time and energy and stress expenses. And so, to me, that's what that is. And then, what I mean by the little fish cruising at the top is if you can figure out ways to front load the work and then intelligently do very little, you bypass competition with them. And so, for me, like, I don't really have to worry about them as competitors. But if I was pivoting to trying to make money this afternoon, the competitive landscape completely transforms. And that is, in my opinion, for the amateur investor, gambling, because as you can imagine, I think a key piece of backstory is like, my aforementioned friend very generously invited me to kind of like bring your buddy to work day, because he was thinking that maybe that was a good fit for me. So I went to like a big deal trading institution in New York to like audit what he was doing. And if it was a fit, then essentially apply for a job and get on that treadmill. And when I walk in, it essentially was like a college basketball stadium where there was no sports going on. It was literally shoulder to shoulder, these probably like 22 to 32 year old dudes wearing like hoodies and like pajamas and unshaved. Some of them are probably dressed to the nines, but I mostly remember the fact that they were like making a point of the fact that this was like anti-corporate. They could do it as long as they were doing well with their mouse. They could dress however the fuck they want. And I remember I walk in, and in front of everybody was somewhere between 2 and 6 screens. And I remember, because I haven't known a lot of people to have this in their environment, each of them had like a Post-it note that had this like mantra where it was like, don't shit the bed during volatility, bitch, or like something like that, where it was this like thing that they needed to remember during the heat of the moment. And so it was like casual, but it was intense. And then when the market opened, I'm rusty, but I believe 9:30 a.m., it then just turned into this flurry of activity, and there would be people like yelling a ticker and then more people yelling the ticker. And essentially I realized that it was this like coordinated millions of dollars, I would imagine, driving in a synchronized fashion certain like stocks up and down. Yeah. And so I watched that for about 30 minutes, and then my buddy saw the look on my face and he's like, yeah, you don't want to do this, do you? I was like, no, but I was like, thank you so much for letting me see this. I wouldn't have been able to imagine this. And so you can imagine like having witnessed that, and to give you a sense of what that's about, my buddy was generous enough to tell me that some of the people that are like at the very top of the scoreboard in a place like that, it wasn't because they were better at assessing the fundamentals of a company. It wasn't even because they were better at reading and having like quick feeds on headlines and anticipating what the news was going to be. It was because they played World of Warcraft and their like literal trigger finger was faster.
Yeah.
And so like that's like, this is what we're talking about. That could not be more opposite of what the investing is about. And so yeah, you're just, and so you can imagine, like I've had people be like, well, you know, I think it's time to step out of the job and I'm going to get a couple of monitors and try my hand at day trading in my basement. And I'm just like, you don't understand what you're up against. And that was about 15 years ago. And so there would have been 15 years of evolution in what they're doing since then. And so for me, if you're trying to make money this afternoon, you're trading, and I am sure that there are some really, really intelligent, probably like eccentrically intelligent people that are able to make money doing this independently anyway. But to assume that you're one of those people is, first of all, I do want to say, like, if you want to try your hand at it, as they say, like, if you're going to play the game, know the rules, know the stakes, know the quitting time, like define the stakes for you. How much time, how much money, how much bleeding are you willing to do before you call it? Decide that in advance. But I would be remiss to ever say that if somebody wants to try something, they shouldn't try, but like have some measure of respect for what you're walking into, because that is to say that investing over the long term in companies is in any way reminiscent of that in terms of the what's required time and energy, or what's involved in terms of like who exactly you're stepping into the arena against, is not the same thing.
So in the context that you walked into, was it like a bank that was trading that money? Like, were these traders trading on behalf of like a bank, or was it like a different kind of financial institution?
From my understanding, it would be a subdivision of a bank, but out of respect for my friend, obviously I want to keep it super anonymous. Yep. But what I mean is like a day trading like team.
Yeah.
It was a coordinated team of hundreds of people staked millions of dollars. And it just really left an impression on me where like the big takeaway, rather than like the smaller details of, or like nuances about the financial industry, was just like, as somebody who is a serious amateur focus investor and who helps other people begin and continue in a way that puts them in position to prosper with probability without taking on or absorbing undue risk. My big takeaway from that was just like, the longer the time horizon, the better, because those guys are not trying, they don't care about anything probably beyond the next, at maximum 12 months, at minimum like 12 minutes. Like that's just move away from the short-term stuff. And that definitely helped me recognize signal when I saw it, when other people were like speaking truth to power about why you should be a long-term investor.
When you're looking at the skills that were on display in that room and with your friend, when you've conversed with these types of people that are trading with a very short time horizon in mind, what do you think it is about it that makes it gambling for the average person?
Just to make sure I have that right. So when I think about what my buddy was doing as an institutional day trader, what makes me believe it's gambling for the average person to try and compete against them?
Or do you believe that?
I definitely, well, if gambling means the odds are that you're going to lose, full stop, and that you can like lose what you have or more than what you have, yeah, definitely. I mean, so think about this. Let's say that you were like, you know what, I'm done being an entrepreneur running a barbershop, and I can just like, you know what, the juice is not worth the squeeze. I can just make money purely with my mind without having to deal with another conversation, another pair of scissors. You set up shop in your basement with, let's say you invest capital expenditure into 3 monitors, and you're like, Jacob Matayiti, day trader, like, let's go.
Yeah.
And your competition is that room that I just described, where they have untold quantities of money and training, years and years of training that they are like congealing into a system. And I think most significantly of all, maybe the fact that they can yell a ticker, and then the entire room can be chanting this ticker and driving things up and down, and they know that that's going on and you don't know. God forbid you get swept up into the same into the same like sea as they are, that you guys come into each other's orbit, like who has the advantage, them or you?
Yeah, definitely them, right? They're doing it like with the IP from the institution. I'm just like probably looking at YouTube or whatever, or some.
Well, you're like a little bored, so you're like side-eyeing Netflix, like, well, this is happening, and this is not good. Now, granted, I have virtually zero experience as a day trader, but I witnessed that, and I've been focus investing for just entered my 20th year, and so that's my perspective. And like I said, if somebody wants to try their hand on it, by all means, but just understand that we're talking 82% of options expire worthless, 90% or more of day traders lose, and some like savants are going to be able to do it, but to be able to beat those guys or like participate like that, it's probably going to require a full-time thing. And actually, while I'm thinking of it, there's this guy, Tim Sykes, who is, I think, still known as sort of like, he's like the face of amateur day trading. And to be honest, I mean, like I've like gone in, and when I was like first learning marketing and studying what people were doing and stuff, I was all on his Instagram and on his podcast and stuff. And I feel like I've dug deep enough to see that he really does understand what he's talking about. And he is actually one of those people that's good enough to win. Of course, it helps to like buoy yourself with by making like educational stuff from wannabe day traders and then rolling that into your day trading. But essentially the main images that he shows is him in a jacuzzi with a laptop. And like that, and it's very eye catching because it's such like cognitive dissonance. It's like, wait, this guy's in a jacuzzi with a laptop. But for me, I'm like, is that actually the dream? Like, do you want to be on vacation worrying about like volatility right now? Or would you rather sort of have it on cruise control? And so, I mean, but if some people want to like take that on and try it, like by all means. And to be perfectly honest, having gone through like multiple funnels of his, he has said these little like very specific pearls of informed pessimism, but more so informed optimism. I'm tempted to say one now, but I think I should keep it to myself, where I'm just like, yeah, like that could have only come about from high stakes experience. And it actually is somewhat generous that he's sharing it in this context. But it has also become very clear, and he'll even tell you, and this is the thing that I respect about him, is he will tell you flat out, 90% of day traders lose. You need to be willing to do the work. And even if you do the work, there's a 90% chance you're going to lose. And if that's not like, that's like a professional poker player explaining how to become a professional poker player would probably tell you something very similar.
I guess to cut through in terms of Tim's advice and your limited knowledge, as you described, just jumping on that trading floor and like looking across Tim's stuff, what do you think it is about the nature of exactly what they're trying to achieve that makes it just so challenging? Is it because of like the skill itself? Like how would you describe what makes it challenging for the average person?
Well, I think just trying to make money today.
Yeah.
So if we're talking about making money over the next 10 or 15 years, the longer you telescope this out, the easier it becomes. Essentially, that is one skill set. I help people with that. Mine, I mean, 10 to 15 years is to the extreme, but like multi-year time horizon, there's a good sweet spot where you can consistently find, as I was saying, high reward, low risk opportunities. To find a high reward, low risk opportunity that makes you money within the next 6 hours to like 6 days. Personally, I just wouldn't know how to tell you how to do that. That's not my area. And the other trouble with it, as I was describing, is that capital gains is higher. So you're every time that you capture a gain, it's sliced significantly more. So that's something. And then another thing is, can you find a replicable way, really, to find that something is going to move positively over the next day or week? But then beyond that, there is also the time expense, as I've described, and the fact that the rewards from this that we're talking about are going to probably be super incremental. The idea that you'd be able to make the kind of return that you could do in a year and a half, 2.5 years, in less than a month, I would imagine it's supremely low. And so, but the thing is, like, to get too far into the weeds, like, I can't really speculate on it. And then that's where people who have been doing this really successfully have such an opportunity to like make themselves known, and people that really want to step in and do this. And actually, while we're talking about this, we had a really good conversation last time about revenue, expenses, equities, liabilities. The trouble with this is essentially you're trying to use your asset column to produce revenue rather than to build more assets. And so you're trying to use this to like cover this month's rent. That is so much more challenging than using a month of expenses in a way that you're trying to grow it into a year of freedom and then sell it off and live for a year, or try and turn that year of freedom into a decade of freedom. It's just a much easier game.
In terms of the skill set that these day traders have, do you think most of these guys have the baseline philosophy that you do in terms of understanding that they can have long-term positions, or do you just think they're hooked to like trying to like the people that are doing it successfully? Do you think they're just hooked to trying to like get more?
Well, I feel like, because I also know someone who's been able to make a living as a professional gambler.
Yeah.
Sports gambler in Vegas. And in my opinion, that's probably even harder. But it's exactly the same problem that's presented with this, which is like, how? If you're like betting blood money over and over and over, like how are you actually doing that? I continue to gamble, actually consistently gamble on the UFC for the sake of, first of all, humbling myself, and second of all, sharpening investing, because investing is so much easier than this for reasons that we've touched on. And so why is it exactly that the Vegas sharp or the virtuoso day trader, well, I mean, first of all, I'm totally sure that some of them are able to do this. It reminds me of F. Scott Fitzgerald's line that the mark of a high intelligence is being able to hold opposite ideas in mind at the same time and maintain the ability to function. A truly smart, truly assiduous person can do that. I think, gun to my head, if I needed to learn, this is what my buddy invited me there because he's like, I think that you can do this. Gun to my head, I think I could figure it out, but I don't want to. And I also don't see the same upside while like exercising lazy intelligence. At best, it's hardworking intelligence, at least to my perception, because your ass needs to be in front of a screen like every trading day to be able to do that well, from what I understand. And so it doesn't harness lazy intelligence in the way that I want. And similarly, some of these guys, it's like the opposite problem, where these guys could very successfully be running funds, hedge funds and whatever, but for them it probably would be interminably boring because there's like a rush. Like you're on a caffeine induced like research binge, and now you're going to war with your team. Like that sounds actually really fun. And so there's that, but what that doesn't give you is the adequate patience, as I was describing, to be able to just stick with something. As Buffett said, the money's made in the holding. And so it's not even maybe that they're not smart enough to understand the two dualities of how to do it. It's maybe more a lifestyle thing where it's like, I don't want to do that. It just makes me so bored and sad. And so then therefore, like, this is what makes them happy. And I have met some quite interesting people, kind of like, like wandering New York, Australia, New Zealand, that I didn't demand to like look at any of the receipts, but that it's plausible to me that you can do this. No, but you really have to be willing, from what I understand anyway, to like develop and continue evolving your own like algorithm, and to be leveraging a huge amount of your time, and the same that it would take to like start a cutting edge business to be able to do that. And a lot of the time that's just to like barely beat the market, if that. And so to me, that's the thing. It's like it would require a balance and a patience that I think maybe like a lot of them wouldn't be interested in.
Yeah, one of the things that I think about with that broadly in the social media space and in conversations, day trading has this challenging, kind of alluring feeling to it. I think a lot of people are really excited, like you say, excited by the prospect of getting a lot of money very quickly. Do you have many thoughts on why, or potentially at least, do you have many thoughts on why people are more attracted to that than long-term investing if the odds are better?
Yeah, sure. Because, I mean, how often is it that instant gratification is pursued much more than delayed gratification? It's literally as simple as that. It's more exciting, the idea of having a huge day or a huge week or a huge month than of like quietly doing your thing. And yeah, to me, like the emotions that come up the most as things that mess people up in investing are greed and fear. I would add boredom. Boredom is a thing that can mess people up, but just because something hasn't, like if you invest in something and it doesn't even go up or down, it doesn't go up in a way that induces greed, it doesn't go down in a way that induces fear, it just stays flat. I have seen people just dash themselves against the rocks of their own boredom and do stuff that they shouldn't have done. And it might have been some kind of like a FOMO thing or whatever, but usually they like wrote an emotional story that didn't actually make sense, and then dash themselves against the rocks of their own boredom. So I think a lot of the time that is the issue.
Just feeling like compelled to do something rather than do nothing.
Yes.
Rather than hold.
Exactly. And I think, well, it also is a belief thing, right? Because when I say the idea that like low risk, high return investing exists, I'm sure a lot of people like roll their eyes, assume that's bullshit, etc. But if you actually sit back and break down how that would be true, like it can be true. And so it is a big also function of what you believe. And of course, what you believe is often dictated by the bucket that you grew up in as a young crab.
Yeah, I have quite a few thoughts on that. But just going back to what we were talking about a little bit last week, I've been watching a little bit of Gary Stevenson's content, and it's very limiting in the idea that trading is very challenging for a lot of people. But I think a lot of people conflate trading with investing. I guess with that, right, why do you think that fear and greed challenge people as well? Because I think that more fits into trading than it does investing, right?
So two things there.
Yeah.
One, as a friendly reminder, is just always segregate between, first of all, the product, the company, and the stock. I see that constantly. And segregate between investing and trading. And I would actually throw in a third concept, which is invading, which is kind of like a mixture of the two. I used to be more of an invader, where I was really thinking about 1 to 2 year results. And as I've learned more and more and more, and as I've sort of just created mistakes that you would have literally been better off like in a coma than in overanalyzing in front of the screen. And you're like, yeah, I would have been much better off in that scenario, literally doing nothing. I've moved much further towards investing when possible, but it is very important to always be asking, what's that time horizon? And if somebody's coming at you about an idea, be it your screen, any of the screens in front of your face, any of the voices in your feed, remember to ask the question, what's my time horizon? And if you find yourself sort of your knees are buckling because of volatility, remind yourself, like, what was the time horizon of this? Because most of the time, the mistake that's made is when you did too much, not too little.
Got you.
Generally speaking. And the second part of the question was, is greed and fear more of a part of trading than investing? I would need more experience as a trader probably to be able to really weigh in on that, but I see plenty of greed and fear and boredom on the investing side. And yeah, I would imagine everything would be magnified if you're really seriously trying to like compress the most out of today. But honestly, actually, while we're talking about this, and like I appreciate you bringing this to the table, because I don't think people talk about this, the distinction between day trading and investing, which is so basic, so fundamental, and probably speaks to why the average person is messing themselves up here or not participating. But essentially, I'm thinking of clients of mine who went from believing that they were incapable, out of their league, etc. Like, I'm not even wearing a suit. How can I compare to these guys that wear a suit? I didn't even go to school for this. How can I compare to these guys that went to school for this? Go from that kind of stuff to getting involved, seeing that actually asymmetric opportunities, fat fish, do exist, getting a taste of that success and like informed optimism that is then rewarded. And then it's interesting because they're the self-flagellation of, oh my God, I should have done this faster and I should have gone in more. That's a little bit of the greed, fear, boredom. Like people always self-flagellate even when they're up huge that they should have done more faster, but they get there when they get there. But eventually what has happened when people really see that through is I've had people tell me, I probably should avoid exact numbers, but we're talking about like 6 figures in 24.5 hours, like 2 market opens, 6 figures in 24.5 hours when they didn't have 6 figures to their name a couple of years prior. And someone else who took years to turn this into making $1 million and then made their second $1 million unrealized, obviously subject to massive volatility, but they made their second $1 million in a month after like slowly closing the gap on their first. And so you're talking about 6 figures in like 2 days or less and $1 million in a month from people who didn't have that much money to their name easily 4 or 5 years prior. The reason that I bring that up is that those performances would stomp any trader, probably the most gifted, the most in the short term lucky day trader. It would be difficult to have put up those kinds of results. And the reason that they did was because they didn't actually psychologically or financially need to make that money in that day or in that month. They were positioned for this sustainably, where they were positioned to the upside with limited or no risk, arguably literally no risk to the downside, because of their psychological and financial stance. They were fine. They were sustainable. And it is because of that positioning, psychologically and financially, that they were then in their long-term time horizon, that they were able to dwarf the performance of people that were trying to make money in that specific time horizon. And does that make sense?
Yeah, that makes perfect sense.
And the reason that I say that, right, is it is simply a microcosm of how the richest people in the world are becoming the richest people in the world. They're just focused investing in a couple of companies that are doing ridiculously well. And if you do that, you will outperform all but the fattest pocketed day traders, if even them. It would be difficult for them to even compete with that with sustainability. So that's the thing. Essentially, like the whole Tony Robbins idea, success leaves clues. We're simply reverse engineering how the richest people became the richest people in microcosm so that we can fulfill the needs of our lifestyle and probably like your family. And if you're able to go over the top, your community. Yeah. And as you will notice, none of the richest people, at least to my knowledge, are day trading. They're investing. But at the same time, I do not want to make it sound like there aren't some people out there that are killing it as day traders, because there are. Like, I know one of them.
Yeah. I guess that's where the gambling parallel comes in, right? Because I know a lot of people that are sports betting, but not many people talking about how consistently they're actually winning. It's more like, oh, I funded on this guy and he lost. Like, that's more the conversation that's going on. Whereas investing, there's like massive differences in terms of the place that people are operating from with regards to belief. As far as I'm aware, with day trading, my knowledge is extremely limited, but there's a lot more comfortability with losses in day trading, as far as I'm aware, because they stand to make more back in the short term than investing, right?
That's not true.
Not true.
So, but it depends what kind of investing we're talking about. Yeah. So, yeah, again, I'm speaking about day trading. I think I've made this clear. I want to just triple down for at arm's length. I am so grateful to my friend for giving me that piece of like real world context. Yeah. That was very instructive for me. And then Michael Lewis wrote a book. I want to say it was it Flash Boys or Fly Boys? But anyway, he wrote a book about this. And the problem is if you read too many books like that, I think you'll just be really scared. It's like watching Wolf of Wall Street over and over. You would just frighten yourself. But it is good that he put an in-depth, brilliantly written story that people could read for context, but don't overstate it. I hate seeing people like say that, you know, like one orange fell out of a tree, therefore like there's going to be an orange famine or something. They try and turn one idea into, it's like an apples to clam sauce thing, where it's just like what is following is like unrelated or a deep overstatement. Just because there is like day trading chicanery does not mean that the entire market is rigged or that long-term investing is invalid. That is not true. And so, wait, I lost myself. I was talking about Michael Lewis.
Yeah, I guess my initial point was like with like Gary Stevenson stuff, which is probably the only true day trading. Well, it's not even day trading. It's like a heavy criticism of trading as a concept. Something that's come through a lot is just talking about how there's so much risk, and essentially who he was working for didn't care about anything as long as the bottom line was there. So they're taking plenty of risk and just hoping that something hits.
Right.
Yeah.
So, okay. So what I was getting at
yeah.
was there are investors that expect to lose money known as venture capitalists, where essentially it's like, I want to, and this might be oversimplifying how the entire scheme of venture capitalists go. But essentially it's like, I'm going to take a punt on a bunch of things, understanding that if one of them hits, that is like generational wealth. That's basically how they go. So they're actively expecting to have like less than a 10%. I don't know the exact number, obviously, and I'm sure it varies according to different disciplines, but they're expecting for like sub 50%. Like, and so they're operating with a gambler's odds. But the difference is, and this is a huge difference, if you win the bet, you don't turn $100 into 200. You turn $100 into like generational wealth. And so that's the difference there. And of course, that's such a coveted thing that access to it is not democratized at all. It's very limited. You need to like know people and jump through hoops and stuff. So, but they are an example of long-term investors that are expecting to lose, but in aggregate, they're expecting to win bigger than anyone else who's ever lived. And so that is that. And then in terms of day trading, I would imagine that they're just trying to come out most of the time ahead. And again, that to me sounds like a grind. I'm thinking of the mentor character in the movie Rounders talking about poker, where essentially it's like, this is just a grind and I'm just going to work every day to like make my lunch money kind of a thing.
Yeah, on the whole venture capitalist piece, one of my clients was actually the first CEO of a New Zealand owned bank, and never talked about money at all or anything like that. And then when I realized, I looked him up and he's like on LinkedIn, it's like former CEO. I was like, whoa. I looked into what he does now, and he's on a bunch of boards and does all that kind of stuff, venture capitalism. I don't know if he's like got a firm or whatever. But I was talking to him about it, and he said most lose. And I'm just like, man, that's crazy that he's got that mentality where you can like put it all out on the line, but then it stands to go so far when you do make a good punt. I guess in that instance is not totally gambling, but there is a lot of risk involved in knowing that some ideas just aren't going to take off.
Well, that's the thing. And so this is where, a lot of these terms, it's so hard to be objective about like where the average median listener of this is coming from. But like, to me, when I hear asymmetric risk, it's a really important concept, but I feel like the way that it's been presented has either been so boring or like deceptive or whatever that it falls on deaf ears. Similarly, when somebody's like, well, if you had invested in Netflix in 2010, then people's eyes just immediately start rolling so far up their head that they have trouble like functioning. But it is so important to be aware of the upside and the downside of what you're doing. And so we talked about this earlier, but I'll reiterate it now. There's very few pieces of investing that with mathematical certainty. Most of the time we're operating more in the realm of like faith and informed optimism. And that's why it gets such an emotional rise out of people, because we're dealing with the unknown and the unknowable a lot of the time. However, if you put money into a business that will not go out of business, its stock can drop 95% based on short-term nonsense, but it cannot drop to zero. Therefore, you're not gambling in the way that we're talking about gambling. And if you invest in a business that can get exponentially bigger, do exponentially better, have a bigger actual impact, and have an even bigger perceived impact, it can turn $1,000 into $50,000, $100,000, $200,000. And so if you make, let's say arbitrarily that you were to make 20 investments into businesses that had, let's say even they didn't have that built-in defense where they could go to zero, but you knew that all of them had like a 50-1 upside potential, all you would need was for one of them to fulfill its potential for the entire thing to be profitable. And so that's where like your client and like mogul was coming from. And I'm sure for him to have been able to afford your haircut that like at least one of those had really worked out. But that's the whole thing. And like, again, Peter Lynch to me has said this better than anybody. It only takes a small handful of big winners to make an entire lifetime of investing worthwhile. And actually, you know what? When we're talking about degree of difficulty of trading, that's, I think, the trouble with it is that I don't think you could say the same thing. I don't think a small handful of trading winners can make a lifetime of trading worthwhile. And that's probably why it's a bloodier, more intensive game. But if you really genuinely love the process of it, that's its own beast. And if people want to try it, then I think it's totally their prerogative. But at the same time, I do think it's good to go in pre-armed with the understanding that 90% of the time it's not going to work out. And even if it does work out, you can find yourself in a spot where you are grinding to just churn out a slight profit that is then getting heavily taxed. And then, of course, the weight of needing to be able to continue doing that in perpetuity if that's the trajectory that you're on. And honestly, while we're talking about this stuff and we're drawing distinctions, there's one thing that I see that annoys me enormously, where people create a false dichotomy between day trading and essentially like uber diversifying, where it's either, wake up, drink your coffee and compete with I think it was Flash Boys, and you're competing with those guys, or your money can just be diversified in an index fund and you don't think about it, but it's not likely to do much of anything. It's going to stick with the market and then you're going to pay a little fee on it. Of course, there's a middle ground. And so like your venture capital client has found like his hyper successful version of that middle ground. Fine Fat Fish is another version of that middle ground. And that's the conversation that I very often have with people is like I'm trying to find something that is less of a temporal and energetic bloodbath than day trading, even if I can do this successfully. It's just too much of a grind. Some people say that also about rental real estate. It's a grind to maintain that financially and energetically. It can be a grind. And the uber diversified obviously isn't a grind at all, but what is a grind is that, or at least a drag, is that it's not successful enough. Yeah. And so that's what we're trying to find. And again, the operative concepts in here are your risk reward and your time horizon and your energy expenditure.
Yeah. With diversification, it's just the limited gains in comparison to those focused positions that makes that less successful, right?
Well, like as an example, right? So 80-20, like 20% or less of the companies are going to present 80% or more of the profits. Wouldn't it be preferable, rather than investing in the S&P 500, let's say, to be able to go in and find the 20% or less, the 100 or less of those companies that are going to produce 80% or more of the result? Wouldn't it be even better if there was a replicable way that you could go in and research them and then follow through on the ones that you found that actually didn't require a full-time effort? That's kind of what we're talking about.
Yeah, absolutely. One of the things that I think about that underpins all of those three brackets, day trading, gambling, and long-term investing, is the hold. Gambling, day trading, the hold isn't even a factor. It's like catch it and let it go. The buzzer beater's on every single day. People are trying to let it go. How, in your experience, have you helped people to hold?
It's a hell of a good question. Might be your best question so far. There's a stiff competition. Yeah, because like how do you help people develop patience? And that's actually one thing that I would share is that's like, I learned this by accident where I would like in college drunkenly and then other times in adult life, maybe caffeinated and enthusiastic, I would like hip pocket pitch stuff that I was excited about. And I learned that it is not hard to get friends and family enthusiastic enough to like just with your conviction level kind of move them to action, where all of a sudden, I remember when I was first starting Fine Fat Fish, they didn't have a couple $100 to like invest in like an intro service and help me get proof of concept. Oh, but they had 40 grand to throw into a couple of companies that I hit pocket pitched at a bar. It's like, oh, I see how it is. And so that's not hard to do. But the trouble is, and I've seen in particular this one like ranting Bitcoin zealot that was like just teeing off on people about how every other asset under the sun was worthless. Put it like sell your family estate and put it all in Bitcoin, like literally. And the problem with showing up with that level of gusto with your idea and not respecting sort of like the other person's perspective or what they want is that it's not difficult to intimidate somebody else into compliance to do something, but it is almost impossible to sway them in such a way that they'll keep doing it in perpetuity. And so you can get somebody excited or scared enough to buy, but you can't get them excited enough to hold and to deal with volatility, greed, fear, boredom. And so the trouble with like sort of people enthusiastically, like your drunk uncle pitching you on the future of AI at Thanksgiving or whatever, is that even if they talk you into buying, what are you going to do? Are you going to call them up every time that you're wondering if you should continue holding? So that does not work. And that's one area where I literally am not willing to tell people stock tips anymore, friends and family and whatnot, because I know that it can excite them to take action, but then it's likely to end in tears. Either, no matter how you slice it, they're going to sell to their perception at the wrong moment. And it's just not good for anyone. And so what is the opposite of that? How do you get people to actually be patient? To me, it is a couple of things. First is I have them write a declaration of independence where on one side of one piece of paper, what is the objective of you investing $1 in anything at all? Like what exactly is the lifestyle that you're building? And what are you, the version of you, the version of your life, the version of your family that you're invested in creating, that you're investing to create? What exactly is that? And getting really, really clear on one side of one piece of paper about where the entire just basic purpose of this. That purpose goes a lot way further than people probably would give it credit for just hearing it now. And it probably sets off some of that like Kylie Minogue, like, I don't know, that feels a little girly to me. Yeah. But like that is a huge piece of it. And then the other piece is teaching a man to fish, where essentially you show them how to find their own stuff. I have found that the more intelligent autonomy I can help put into the person sitting across from me, where they don't need me to find an opportunity. They don't need me to validate an idea. They don't need me to tell them what to do when their stocks go up, down, or sideways. If they're forearmed with their process and also these like invaluable artifacts of that process that essentially time capsuled what they did and the decisions they made and why. And they have these things to look at when they're freaking out. Those, like, I call them touchstones for when you're temperamental. If you take action without having done front-loaded the work to have those in hand, the odds, and it's gotten so much harder now because of 24/7 trading hours, and you can literally drink a little bit too much caffeine, go to bed, have like a panic attack, roll over at any time of the day, panic sell everything. So it's just become so much more difficult to do the right thing. You don't have to like call your broker with like a rotary phone anymore to do something. Like it's so much more dangerous now. And so almost all of it, as they say, 80% or more of it is psychology, but then 20% of it is having a replicable process where you know that you could earmark a long weekend and like find another fat fish, back it yourself, etc. But without an understanding of sort of like the outcome and your process, and without those sort of foolscaps that you can look at it and like recenter what you were thinking at a glance. What the fuck was I thinking? You can center yourself in 30 seconds by rereading that piece of paper. It becomes essentially impossible on a long enough time horizon, in my opinion, to like calmly, consistently do the right thing.
Got you. So you think it's more of a indicator when people are struggling in volatility or struggling with choices around what they should be doing in the heat of it, that it comes down to their lack of vision, would you say? or their lack of alignment with
There's a vision and there's a process.
Yeah.
And so the way I think of it, actually, for any IKEA fans out there, I used to have this, but I haven't been able to track it down in New Zealand, which annoys me greatly. But IKEA sells these two posters. One of them is a sort of like glorious tree. It makes it look like you're like underneath this tree. It's like this like glowing golden thing. It looks like it's like an oasis. And then the other one is this bridge. And it is like, you can barely see past like a step in front of you, but you can also see like that tree in the background. And I loved them as like a combo in my little apartment when I was first writing this project, Find Fat Fish, when it was a book proposal called The Fuck Up's Guide to Finance, How to Make Money in Stocks Without Much School Reading or Math. I had those two things, and it solidified for me that the only two things that you can really focus on is visualizing as clearly as you can end game, and then just taking the next action, taking the next step, either taking the next step on the bridge or revisualizing why you're doing this in the first place and where you're going. And to me, like if you lose sight of either of those two things, when you have serious skin in the game, you're likely to fall off the bridge, I guess. And so for me, like you're reminding yourself what you're doing and being able to center yourself. This cannot be some like amorphous pile of like physical and digital notes. It needs to be something that you can recenter yourself with quickly. You need to remember it. And then you also need to be able to review the core rules, the core principles, and your core decisions that you made. Because if all of that ossifies into a distant memory, you'll fall apart. And it's completely it's a psychology thing more than anything.
For people that hear that and they're scared to get skin in the game when it comes to buying their first stock, why do you see it as a viable option beyond everything else? We've covered this a little bit, but I guess what I'm saying is, for people that haven't started, why should they believe in themselves to be able to get away with it and do it?
Why should they believe in themselves? I do think that that's a really good, very elemental question. Most people don't believe in themselves, and that is probably the biggest thing. And so feeling like they're outclassed by the world in some way. They don't belong here. They don't belong with this level of autonomy or independence. I think maybe the most exciting aspect of this is that you get to have the chance at proving something to yourself in an arena where if you participate in the long term and you're floating above the sharks and the whales that are tearing each other to pieces, the odds are actually in your favor to win. And so you get to prove something significant to yourself. I think that was the first thing. It's just like I have the audacity to try, and having that audacity, the gender ambiguous balls to even want to be psyching myself out and like be thinking these scary thoughts, like that is a reason in and of itself. I have the audacity to try. I have like the will to move past fear into courage. So that'd be one thing. But the other thing is, this is why I like to reference Peter Lynch so much, is that the greatest, like the Michael Jordan of institutional investing said that you could 3 books wise in 1989. And again, going back to the importance of those books as proof of concept and why it was so incredibly generous for him to do so. Unless you believe that somehow in 2025 and beyond, it's no longer true what he wrote in like 1989 through 1992. But in my perception, everything is now exponentially more true. If you, like the real weight of and value of those books is as that first reference point that like, yes, you can try. Yes, you can at the very least intelligently try. You can also come to Find Fat Fish and look, and I have stacked the box with informed optimism, the stuff that I'm willing and happy to share in a public facing way. You can take a look at that. And if that helps you begin to believe, because one of the things that you want people to feel for their benefit and the benefit of everything involved with Fat Fish is if they were to listen to a success story, be like, okay, if they could do it, then why can't I? And so like if a mailman and a special education teacher in their mid 50s that had never tried anything related to investing or entrepreneurship learned how to do this, found a 9-bagger, and then created a company to make more, to funnel more money into their Fat Fish to be able to control their retirement trajectory. Like if Kevin and Missy could do it, then like why can't you?
Mm.
As long as you but the thing is, as long as you show up like them, and that's not guaranteed.
Yeah.
But if we're talking about purely a self-belief issue, yeah, like I feel like that's part of the work. And like where like I still don't have a great relationship with marketing as a word or a concept, but like where there can be the Venn diagram where like you're doing marketing for a business and doing well by the general public, like that's the opportunity, is actually showing informed optimism responsibly that then helps people give themselves license to, as the Kiwis would say, take a punt. Although I don't love that because that sounds like gambling, to like invest in themselves.
Yeah.
And
Back
like,
yourself.
yeah. That's a better Kiwiism for it.
That's
Back
a
yourself.
one. Yeah. Back yourself. Yeah. I think I'm like looking over the book, Peter Lynch's One Up on Wall Street over there, and just thinking of the first chapter and exactly what he's saying. And it's pretty incredible really to hear from, as you say, the institutional Michael Jordan of investing. He's saying in that chapter, we stand to do better than him. I didn't do any of that, like, financial education stuff at like university or economic education, but I feel like I can do it, and I feel like the people viewing this can too. Yeah.
I mean, you could mic drop on that,
Yeah.
but I'll stack that. If for anybody that really wants to seriously entertain the diversification is better argument,
Yeah.
it's just one observation. There's a lot more, but the basic observation is the Michael Jordan of Wall Street, essentially, of institutional investing, who at one time was, by his own admission, like blowing off his family because he had to carry 1,400 investments, wrote 3 books saying that he would have done better if he could have held 5 to 12.
Mm.
That is all.
Yeah.